Hey, what's up, my friend? So, in today's episode, I want to talk about how do you become a super scalper? What are the things that you must know? So, just a brief overview of what scalping is, right? So, scalping is one of the fastest form of trading that you can find, right? Most traders, they are scalping the markets even without the charts. They just look at the order flow, they look at the bids and offers, and they can make their trading decisions from there. And at the same time, there are some scalpers who trade off the 1 minute time frame, the 3 minute time frame, and they can trade anywhere from 20, 30, 40, 50 times a day. So you can see that scalping really is a high frequency trading. There's a lot of things going on. It's fast paced, and let me share with you, right, what it takes, to become a super scalper, or how to become one. Number one, you must know your market. You must know the behavior of your market. You must know the market as though as you treat her as your wife. You must really get really intimate with her. So this is why as a scalper, you only pretty much trade one or two markets, maybe the most three markets, and you really understand the behavior of the market deep inside. It's like, having a wife. If she's not talking to you, you know what's wrong immediately. Maybe you didn't clear the trash, maybe you didn't make her happy, maybe you forgot a birthday, whatsoever. It's the same for knowing the market. You know how the market behaves whenever it breaks above the previous day high. Does it lead to a continuation in the move with follow through, or does it reverse back lower? Or maybe certain markets, right? It's correlated with certain markets. For example, back in my prop trading days, right? The Nikkei futures is correlated with the Japanese yen. So as a scalper, right, you have to know the correlation between these different markets. And also as a scalper, you have to understand, right, the hours of the market that you're trading. What time of the day is the most volatile? What time of the day is the least volatile? And for most markets, right, usually the lunch break, that's where the markets are quiet. The market is usually in a range, it's not moving much. And usually in the opening hours, right, that's where the market is the most volatile as well as the closing. So as a scalper, you have to know all these details. That is your bread and butter. You have to know her well. You have to know your markets well. So that's the first criteria of being a great scalper. You have to know your markets really well. Number two, as a super scalper, you gotta be willing, right, to protect your open profits. Because let's face it, right, scalping is a career, it's a job that takes anywhere 12, 14 hours a day, right? That's probably your main source of income, and you want to protect your main source of income. So back then in my prop trading days, I have a boss who have this $500 rule. So every day, right, when he trades, if he's down $500 for the day, he will get up from his chair, leave the office, and never come back for the day. And he's pretty much done for the day. So in a way, right, his maximum loss for the day is $500. But what if he, let's say he's up $2,000 for the day? How does he approach that? So again, he used a trailing stop loss technique. So let's say he's up $2,000 for the day. Again, he's not going to be willing, right, to give back all $2,000 of open profits. What he'll do is that he will again have a trailing stop loss. The most he'll give back is $1,000. So he's willing to wager, right, that $1,000 of profits that he has earned for the day to see if he can make it into something bigger. If he can't, and his open profits for the day is down to $1,000, right, meaning he made $2,000 initially, he lost $1,000, right? Right now he's up $1,000 for the day. He will stop trading and again leave the office. So this way he protects his downside and still let his upside run as much as possible. So when you take all this, right, and look at 20 trading days in a month or 22 trading days in a month, you realize that his maximum loss for the day is $500. But certain days that he really make money, can make a few $1,000, $10,000, $20,000, right? So that's how he kind of make a career out of scalping, right? And that's what really super scalpers, professional scalpers, that's how they look at scalping the markets. And number three, you have to be versatile. So what I mean by this is that as a scalper, you can't just rely on one fixed pattern like, oh, I only trade breakouts, right? No, you're scalping the markets, right? You're not taking a swing or position trading approach where you can, look at 50, 60 markets and cherry pick your trading setups. No. As a scalper, right, you only have, one or two markets that you're trading. And if those markets happen to be in a range, then clearly breakout setup, right, won't be suited for those market conditions. So as a scalper, you gotta be versatile. You have to be willing to trade breakouts. You have to be willing to take counter trend trades. You have to be willing to take trend continuation trades. You have to be willing to trade in the range. You have to be willing, right, to take trades according to the current market environment. You can't, cherry pick your trading setup based on what you know. No, you have to react accordingly, right, to how the market is in right now. And that's how, right, a good scalper is like. They can adjust their trading strategy, right, to the current market environment. They are versatile. They can trade different trading strategy, entry techniques, and much more. Number four, as a scalper, you must visualize what the markets can potentially do. And this is especially important when you're trading, important news release like the non-farm payroll, the FOMC, earnings or whatsoever. Because as a scalper, things are so fast-paced. When the news is released and then you think of what I should do now, it's too late because the move would have already occurred. So what super scalpers, what they do, right, is that before the news even comes out, right, some of them, back then when I see in my prop trading days, they'll go down for a smoke break. And during the smoke break, they start to visualize what the market could potentially do. So for example, let's say FOMC, right, the market has raised interest rates and the price drops. Then they ask themselves, if the price drops when interest rate rise, at what price point will I be looking to buy? At what level? And then what is the entry trigger, right, I will be looking for that would get me into the long trade? How many units do I buy? Do I buy 5 lots, 10 lots? Where will I get off the trade if I'm wrong? And if I'm right, the market moves in my favor, where will I look to take profit? You can see that they are planning this ahead of time. And that's only one scenario. What if interest rate goes, let's say it didn't cut, it goes up instead. And maybe the price goes up. At what point will I be looking to sell the market? How many units do I sell? And stuff like that. So you can see that all these scenarios, right, maybe 3 or 4 different scenarios, is played out in their head even before the news is released. So when an event occurs, right, it fits into one of their scenarios, they just react accordingly, according to what their mind has already prepared for. And that's really a hallmark of professional scalpers. That is what really separates the pros from the amateurs. It's all the mental prep work, the visualizations, the accounting for all the different possibilities that could happen in the markets that separates, right, the professional scalpers and those, wannabe traders. And also, as a scalper, the fifth thing that you must know is that you must go with the flow. So scalping is more of a feel rather than something that is, quantified, right? A step 1, step 2, step 3, step 4, step 5, all check, then I take the trade. As a scalper, right, you don't have the luxury of time to have a checklist that, oh, this meets my criteria, this one meets the criteria, oh, I can take the trade now. No, because you only have seconds to make a decision. And if you don't make a decision, right, you could lose a trading opportunity, or your stop loss, right, might be larger, right, than what you expect. So as a scalper, you have to go with the flow, because chances are you would have, taken thousands of trades before this, and this is just another trade, that you are taking, and you have to be familiar, right, of what you're going to do, the actions ahead of time. You would probably know what to do already, even before you can even, explain it in words. So as a scalper, you have to be willing to go with the flow. And I agree that this is not for most traders. You're the type of trader that, you need a checklist, right? Oh, check 1, check 2, check 3, check 4, check 5, all 5 get fixed, right? Then you take the trade. Then scalping is not for you, because, you just don't have the luxury of time. So before I end, this episode, I want to say that, no, scalping is not for everybody. Who is it for? I would say it's mainly for those who are young, fresh blood, out of school. You have all the luxury of time. You don't have any liabilities, no wife, no kids. Then hey, scalping is something that you can try, right, at a proprietary trading firm, who will teach you along the ways. But if you're a trader, right, maybe you're like me. You have wife, you have kids, you have other liabilities to account for. Scalping is not really something that you want to do, right? You just don't have the luxury of time to be sitting down 12-14 hours a day, away from time from your family and kids and stuff like that. So I would say most of you watching this video, scalping possibly is not for you. But if you happen, right, to be a scalper that you think, hey, this is really for you, then bear in mind the points that I've just shared with you. Okay, so with that said, I wish you good luck and good trading. If you've enjoyed this episode, hit the thumbs up button, subscribe to the channel, and I will talk to you soon.